Hello and happy Friday, June the 21st, 2024. I am your host, Evan Medeiros. Welcome back to another episode of Stock Market Weekly. This is the show where we cover everything that's going on across financial markets with a focus on the stock market, of course. And the agenda is pretty light this week. We did have a short week. We had a holiday in the US here on Wednesday, so markets were closed. But we did get a little bit of action, a little bit of sell pressure in NVIDIA and semiconductors more broadly, which we do want to talk about. There's no real technical damage there at all just yet, but we're going to highlight it and just see if we can make some sense of what's been going on there. We've also got some sectors that are starting to turn back up. So we're going to look at a couple of the stock market sectors, and we have our first mystery chart. Usually sort of just kind of highlight the points here, but I'll leave you in a little bit of a suspense. It's a bit of a love-hate stock, and there is a nice kind of consolidation range developing here that could lead to some opportunity. So we're going to talk about that a little bit later as well. Stick around. Hope you enjoy. All right, we're back. We've got some charts in front of us. TC2000, that is a charting platform we are using throughout this video. And as a reminder, if you are a new user to TC2000, or if you are an experienced one that just needs a little bit more out of the platform, reach out to us. Let us know what you're looking for. We do a lot of development and working with traders to get a little bit more out of this platform. Customization, coding, indicators, scans, all the good stuff. So check out our website, thetraderist.com. Now, let's get into the numbers here. On the right-hand side, everything in the green here this week. Another grind higher for the U.S. averages. The Dow Jones at the top of the list this week. That's the first time in some time we've seen the Dow actually lead to the upside here. You can see the 1 month returns are actually negative here for the Dow. So it is nice to see a little bit of catch up getting played right now. Same thing with the Russell 2000, also was the second spot performer. Now, for the second week in a row, however, we did get markets up, volatility up. So we got the VIX on the S&P and we got the Nasdaq volatility index both up about 0.5 point to almost a point this week. We're still at very subdued levels. So we're still in the lower sort of rank percentile of where volatility is, but it's notable that at least in the last couple of weeks here, we're starting to get vol up, markets up just a little bit, as some of those big mega cap stocks had just gone parabolic or in the process of going parabolic. Now let's take a look here at sectors, what worked this week. Most things did. So at the top of the list, though, it was a changing of the guard. We had consumer discretionary, energy, and financials leading the top three there, up about 1.5% to 2.5%. On the downside, utilities and real estate were the two red spots this week, followed by technology, which was green this week, but third spot on the underperforming list. Now let's take a look here at our trend filters. This is our smart trend filters built for TC2000. It's also available for TradingView. It's one of our custom indicators that helps us measure and smooth out noise, path of least resistance, helps us give an objective look here at who's dominating. And what you'll notice is we've got a couple of fresh buy signals here. First in communication services. This is all in a daily time frame. So this indicator is fractal. It can work across time frames. This is a daily chart here. So communication services starting to print a buy signal. Consumer discretionary turned up this week. Real estate turned up this week. Consumer staples turned up this week, and healthcare also turned up. So we're getting a little bit more kind of participation or kind of clear signals here that some of these sectors want to move to the upside. If you recall, a few weeks back, we were basically looking at technology. Technology was the only thing that was working. It's still green because it's been so strong over the past few months, but you're starting to get some more catch up and participation, across these other sectors. Now, let's take a look here at market breadth, 52-week highs, 52-week lows. Look, this ratio is pretty similar to what it's been the last few weeks. We're seeing a dry spell really in both the number of stocks hitting highs and the number of stocks hitting lows. We are still seeing marginally more stocks hit 52-week highs. Again, lots of comments out there. I think there's been just lots of narrowing of the leadership in the stock market that folks have been talking about it. We were talking about it last week about how things were thinning out and we were getting that concentration in technology, but we're still not seeing any big sell pressures yet. We're not seeing any sectors break down. In other words, we're just seeing kind of stagnation where things are either going sideways or chopping in a range. We're not seeing that breadth expansion to the downside. So I don't want to sound the alarms. I think there's lots of people sounding the alarms. I think we should be aware, eyes wide open right now, but this is where that, you could see a catch up trade start to develop as well. So I'm not convinced yet that just because we have narrow leadership, we have to break down in some ugly, nasty fashion like many folks are now starting to look at. So I'm still glass half full on this market. I'm cognizant that the leadership is narrow, but I'm going to remain open-minded here. I'm going to assume that the prior trend still has the dominant hold on this market, which is up, and we're going to continue to monitor this day by day or week by week. We do this video every Friday. And if we do start to see a big acceleration and uptick in the number of stocks hitting 52-week lows, then I will absolutely change my tune to a more pessimistic glass half empty outlook. But for now, we're just going to continue to monitor. Now, if we take a look here at IBD's list, so shout out to Investors Business Daily. IBD, they are a sponsor of the show. They help make the show possible. This is their top 10 of their top IBD 50 list. You can see it was a little bit of a mixed race here for their stocks. You can see that we had some green, had some red. Generally speaking, though, these stocks have been working pretty nicely for the last handful of weeks. Got some big winners on here. So get access yourself. Link in the description of this video, and you can stay up to date with all of IBD's top 50 list. Now, let's move on here to commodities. We've got oil at the top of the list, up 3.38%, so not too shabby this week. Meanwhile, we had the dollar up. Pretty much everything else was in the red. So gold, the metals, Bitcoin, agriculture, natural gas, everything was negative here this week except for pretty much oil. I don't have the whole comprehensive list of commodity ETFs, but I've got the big ones, and you can see there was definitely a standout there. If we move on to treasury yields, you can see that things were pretty flat mixed this week. They were up slightly, but really not changing a whole lot, mostly kind of like an inside digestion week. And generally speaking, the trend has been pretty supportive for equities here as treasury yields have been moving lower, bond prices moving higher, and that trade still seems to be pretty much in motion here. You're seeing lower highs, lower lows develop now in the treasury yield indices. Now, let's move on to some price action analysis. We're going to look at the S&P 500. Here's the weekly chart. Again, a little bit of a tail up here at the top of this week's range. So in other words, we didn't close quite at the highs of the weekly range, but it's still in all-time high territory. All-time weekly closing highs here for the S&P 500 up at 54.64. If we zoom in on the daily chart here, you can see a couple of things going on. First off, momentum is still pretty decent in the S&P 500. And if we take a look at the near-term price action now, you can see we had a down session on Thursday, followed by another down day here on Friday, but just marginally. I mean, you're talking down 16 bips on Friday. So really hasn't been anything too treacherous yet. This uptrend that has been in place now for, well, technically a very long time, but I guess the most immediate uptrend here from the start of June is still in place. This is a pretty steep slope here. We're kind of testing it right now. So look, we could see a little bit of rotation. We could see a little bit of selling pressure start to creep in here into the S&P 500 into the month end before the 4th of July holiday. We'll have to see if that actually takes place. For now, though, price action still looks pretty good. It's hard to be too pessimistic about this market right now. It's gone on a big run. The worst part is basically that it's moved too much too fast, right? We talked about some of those weekly Bollinger Bands that we were starting to get above the weekly upper Bollinger Bands in the Nasdaq 100 last week. I think similar for the S&P 500. So, there's a little bit of froth that could be worked out of the system here, but generally speaking, still not seeing any big flags, big glaring divergences as of this time. If we take a look here at the Nasdaq 100, you got basically a similar situation here. You saw back-to-back sell on Thursday and Friday. Again, volume picking up a smidge. We're still more or less holding this uptrend that we've been in. Momentum MACD looks pretty decent. We are, again, a little bit stretched. Let's take a look here at the weekly Bollinger Band. We're entirely above the upper weekly Bollinger Band. So that, again, I think is the most obvious case for a consolidation and just a little bit of a catch up and kind of a breather trade. If you take a look here at this weekly bar of the Nasdaq 100, it's a little bit ominous here. It's not the most optimistic looking candle when you've got this big tail on the top end and you close towards the low of the day. So, or the week in this situation. So look, a little bit of rotation here, a little bit of breathing and some sideways, I think would be welcome by all. And we're going to have to just continue to keep an eye on it. IWM, this is again in its own little universe. We've been talking about this consolidating sideways. Don't really focus on it. There's some individual stocks in this market that are working and some sectors that could work. But generally speaking, the Russell 2000 appears to still be in its holding pattern. So that's about it. Nothing too exciting. We've got a little bit of warning sign, a little bit of selling pressure kind of coming in here into the market on the weekend, but nothing too dramatic as of yet. Again, you'll have to know your risk levels for your time frame and manage things appropriately. Let's move on to sectors. I want to talk about some sectors this week. These are some of the sectors that we referenced earlier that are starting to turn up. We're starting to get some fresh buy signals here on our smart trend filter. Healthcare is the first one. So XLV clearly not breaking out just yet, but certainly in a pretty decent looking technical pattern here. This has essentially been consolidating all year long since basically February. It's been moving sideways. It's been in this range. It's now starting to put in a little bit of a higher low here, right? And the question will now just be, can it push through? Can it put in a breakout bar, some type of expansion in range and start to take out these 147 year-to-date highs here? Something to pay attention to. It's fueled up. It's consolidated. It's not overbought. This is a source of potential rotation for continuation of this bull market, right? Like this is what you'd be looking for is rotation across sectors. Maybe technology takes a breather. Maybe mega caps take a breather and you start to see some things like healthcare start to break out. So over 147 starts to get a lot more interesting, something you can put on your radar. We can also look at staples. Look, I know these aren't the most sexy sectors that most traders are going after, but they're still actionable and they are still showing some decent relative strength. They're starting to firm back up here. So consumer staples, again, you had a little bit of a higher low situation put in here. You've got some clear kind of resistance up around the $78 area. It's not overbought. Let's see if you can get some rotation here. If we go to real estate, this one clearly in a slightly different pattern than the rest. It's not at its all-time highs by any means, right? 2022 was the big highs for real estate, but it is getting its act together. It's consolidating here. It's probably enjoying the lower yields that have been coming off in the treasury markets. And again, this is kind of fueled up and consolidating pretty tight here over the last handful of days. So something, again, something that's worth keeping on your radar. XLY also starting to break out this week. This one's a little more kind of actionable, breaking out, not quite to new highs, but certainly working. And finally, communication services. This one has generally been pretty strong here over the last handful of months, so it's a little bit different, but it did consolidate for a few weeks, and it looks like it wants to start to get going again. So those are some sector views there, getting a little bit more actionable on some of the sectors that are starting to turn up. Hopefully that was helpful. And we're going to look at two stocks here. The first is NVIDIA. So, of course, every single person that knows about the stock market knows about NVIDIA now. This is finally putting in some back-to-back, sell days, some noticeable days here, some days that are not throwing the whole trajectory off yet, but they are days to take notice because you did have kind of this pretty much a bearish engulfing bar get put in here on Thursday, and it did it on some heavy volume. So essentially it opened the session at all-time highs and then it closed below the Tuesday's lows. So that was interesting. That was notable. And when you have something like that, you basically are looking for follow through. Well, you did get some follow through. On Friday, we saw a 3% down day, and you are starting to break now just the small kind of series of lows here, and you're starting to break kind of this upper trend line that has been in place. So you've got a little bit of short-term technical damage here in NVIDIA. Now, of course, the stock is up a gazillion percent, so this isn't throwing any big wrench in the bigger, broader technical structure. But look, every pullback has to start somewhere. So, you know, for NVIDIA here, maybe we do get a multi-week, dare I say, multi-week pullback where you could even get a check back into the, you know, 110, 115, maybe pre-split levels. If we take a look here at the weekly chart for NVIDIA, maybe we check back, retest the highs here from April. That would be down at $100. That would be about a 25% pullback, and it could still be a very strong, viable stock in an uptrend and extremely healthy. So something to take notice. Of course, if you are a believer that this camp is happening, or if you believe this situation's happening, then you do probably get, again, a slightly bigger correction here in the Nasdaq 100, in the S&P 500. Maybe you do look for that rotation trade into something like healthcare. This is how it is all sort of being mapped out as a potential scenario to think about or have in your back mind. If we look at our mystery chart here, we're going to wrap it up with Tesla. Tesla is our mystery chart. I put love-hate. I don't know that it's fully love-hate still. This was a very polarizing stock for quite some time, but Tesla here has just recently gone through its proxy vote again and winning sort of the pay package here by Elon Musk, although I'm sure there's still a couple of hurdles that need to be overcome. This stock is interesting because, again, if you throw on Bollinger Bands here, take a look at how tight they've gotten. This is basically just a representation of consolidation, of the fact that the stock hasn't gone anywhere. It's been overlapping, it's been going sideways, it's been indecisive, and there has been a lack of trend. And usually these situations or these scenarios lead to volatility expansion and a potential trending move. So I think Tesla is pretty ripe here for a directional move. Now, what direction? I don't know. It could be a break to the upside and start getting back into this old range here from 2023, or we're going to come back down and start to fill this open gap here from the April timeframe. Time will tell. We are not here to predict. Weekly chart, though, does show, again, some compression going on here in the Bollinger Bands, and just, again, price action specifically here. I think you've got a nice, neat, orderly range to play with. 171 to 187. That's pretty tight for Tesla, especially for the time that it's been moving sideways here. So I think it's worth keeping on the old watch list. Do note that all of the updates here have been some nice, strong, heavier volume days, above average volume as of recently. All right, so that is what I have for this week's trading. Hopefully this was helpful. Hopefully you had a good week trading out there. Short week, but we back at it for the last and final trading week of June 2024. Next week, we have links in the description of the show if you want more from IBD, our own trading services, or anything with TC2000. Check us out in the description of this video. Take care and hope to see you in a future episode.